This Wednesday, I was joined by University of Illinois Professor of Agricultural and Consumer Economics, Scott Irwin. We covered a multitude of topics, but began by discussing planting delays and the upcoming May WASDE report.
It has been cold. Trust me, anybody who's been outside knows that. But we've had a really good planting window open up in the last week. So we are actually about pulled even nationally with corn planting compared to last year, and we're ahead of the 5-year average. So it actually looks to me like we're probably going to have a normal to a bit faster than normal planting pace for both corn and soybeans this year. But there are clearly a lot of concerns about the cold weather and how that's going to affect crop emergence. Those are certainly legitimate, but I don't think that the planting progress itself is probably going to have a big market impact. So, the bigger questions will be surrounding corn and soybean acreage, and then what at these price levels does the USDA do in their May WASDE with usage levels for corn and soybeans?
And Scott, last time we had you on the program, you discussed the need for the U.S. to plant additional acres of soybeans. At this point in the planting season, do you foresee that happening?
Well, I was really surprised by the USDA's March prospective planting numbers, as was the market and virtually everybody that analyzes the markets. It came in at 91.4 million acres of intended planted acreage for corn, 87.6 million for soybeans. And both of those were substantially less than what most people were expecting. And that's the real kicker where we stand today. Not as much the absolute size of corn or soybean acreage, it's the combined, they're 2 to 4 million acres short. We don't quite know where those acres went. A lot of discussion. A lot of people think they're going to come back in the June and later reports. Maybe, maybe not. And so if we stay at 87.6 million planted acres of soybeans, something's got to give. Our demand base is just too big for that acreage number. I thought we needed at least 90 million acres of soybeans when we talked the last time. And I think 91 million acres is what we really need to give us the cushion on our supply demand situation. And I don't think there's any way we're going to get close to that now.
And Scott, while we're on the subject of soybeans, we had a viewer write in asking how you advise marketing fall soybeans at this point in the season.
Well, with the kind of new crop price bids we're seeing now, $11 plus, my attitude is, gosh, everything looks bullish right now. I think that's the time to begin taking some prudent, small steps to taking some of your price risk off the board. At least right now, I think we should be considering at these price levels marketing what you don't have covered by federal crop insurance. So if you have an 80% guarantee, think about selling 20% of your expected production in soybeans.
And of course, corn prices have been doing very well as of late. How much longer can this grain rally keep up the pace, and when do you anticipate seeing a cap on it?
It's continued to be powered by both supply and demand events. For example, recently, I think, have really been moved more by supply events. The relatively low acreage numbers coming out of March from the USDA for the US, and now the safrinha crop or second crop corn in Brazil is running into, it had some planting delays and now some pretty severe dry weather. And Brazil's the second leading exporter of corn in the world now. So those are, very unpredictable factors. So how long will it last? Basically, I think the strong prices will last until the first major producing area in the world has really good weather. So, for example, if the U.S. happens to be the area that has really good weather this summer, and we could easily have a 180 bushel plus U.S. national average for corn if we had really good weather this summer. And despite our cool spring, I still think that could happen. That would definitely cap the rally.
And Scott, before we let you go today, do you have any other marketing or risk management advice that you'd like to share with our viewers?
My old mentor here at the University of Illinois, Tom Hieronymus, still had some of the, I think, greatest farm marketing wisdom anyone's ever come up with. He was a big believer in, taking advantage of these kind of big unexpected price run-ups when they occurred. He often liked to talk about short crops with long market tails as the price pattern. And I just think that we need to be aware that, prices are not going to go up forever. And we have gone up so far, so fast, nearby corn futures over $7. Historically, those, even by the standards of 2008 or 2012, these are very high prices. And, I think to the degree that farmers are comfortable and can do this, that they need to be switching into a mode. Okay, how can I implement a marketing strategy that helps me extend this period of really beneficial prices? So, our own farms back in Iowa, we're already working on beginning to market the 2022 crops.